Hello, everybody. I'm Todd Wilson here with WPTV. Of course, I'm a reporter. And joining me, as you see on the screen here, is Chantelle Brown. She's with Class Tax Solutions. Thank you for joining us, lady.
Not a
Today,
problem. Thank you for having me.
cool. So today we're going to talk about the new announcement for the child tax credits. It's enhanced child tax credit. And I think the first thing that most people would want to know is exactly what is it, Chantelle?
So the child tax credit is a refundable credit that's eligible to taxpayers who have dependents between the ages of newborn to 17 or 16 up under the old code. The expanded child tax credit is a fully refundable credit where if you have a child that's below the age of 6, then the fully refundable portion is now $3,600. And if you have a child between 6 and 17, then it's $3,000. So that is going to be definitely income restricted. So it's depending on your income, but it is a fully refundable tax credit.
Okay, let's talk about the income restrictions because I know it's. Do you know that the difference between the income for couples
Right.
and a single person?
Absolutely. So for a single taxpayer, the income is going
Talk
to
to me.
be as a single taxpayer, the income is going to start phasing out, or the credit will start phasing out at the income of $75,000. And for those couples who are filing a joint return, that phase out amount will begin at $112,500.
Okay, I'm curious, like how much money for every single child that you have?
So again, that's going to be based on their age. So for kids, so if you have, if there's a family that has, say, a child that's 3 years old and a 12-year-old, they will receive is up to $3,600 refundable for the 3-year-old and $3,000 refundable for the 12-year-old. Simply meaning that with those, if they were going to take advantage of the expanded part of it, where beginning July 15th, the IRS is opening up a portal where you can opt in to receiving those credits in advance. We're talking about an additional 350 and 300, 250 and 300, so $550 that a family with children in those age brackets could have bringing into their homes every month between July and December.
I was going to ask you that. How long is this going to last, and does it have any bearing on your taxes the next year?
So it is anticipated to go from July 15th through the end of December. So about 6 months. So about 6 months worth of payments. And absolutely, the bearing that it has on your taxes is when you file the 2021 taxes, you would, if you opted into that program, you would have already taken a half of that credit. So if the credit is the $3,000 credit, what you will be refunded during the processing of your tax return would be just the remaining balance, which would be the $1,500.
Okay, now I understand that there's a point there that people can actually opt out of this situation. Is that the case, and do you recommend that?
Right. So with this, once the portal is open in July, you would have the option to opt in, meaning that you want to be able to receive those monthly payments, or you can opt out saying that I want to just wait until it's time to file my taxes and claim the full credit at one time. My suggestion into that is definitely that it's circumstantial, because there are some people who that $500 or $300 or $250, whatever it is, based on the number of qualifying dependents that you have, it can be substantial and make a difference in someone's budget right now, right? But then there may be someone else who they're not having such a difficult time financially, and they really don't need to have those payments. So I would say that it's circumstantial. But if you are having any doubts, or if you have questions and you just want to make sure you're making the right decision based on your circumstances, is that you speak with a professional who would be able to help guide you through making that decision.
Okay, Chantal, I've got a question here from Caitlin Nicole Herrera. She says, is this automatic, or do I have to enroll?
Caitlin, based on my understanding, is you're definitely going to have.
I think she's frozen. Can you hear me, Chantelle?
I can. It's a little fuzzy, but I can hear you.
Okay, can you repeat yourself? Because I don't think that Caitlin got a chance to hear that. Is this
Oh,
automatic or does she have to enroll?
so you're definitely going to have to enroll in the, once the portal opens up, you will enroll because you have the option to opt in or opt out. So they're not going to automatically send payments to the taxpayers. You have to decide if you want to receive those monthly payments or if you do not want to receive it. So you're definitely going to have to enroll in the portal once it opens up in July.
So here's my question: Is there, when are those payments supposed to be received, and how are they supposed to be received? Is it going to be in the mail or is it direct deposit?
So as of right now, the latest guidance that came out is saying that the portal is supposed to open on July the 15th, and they are anticipating that the payments will be sent out via direct deposit. So my guess is that if you don't have direct deposit set up, if you don't have a bank account, then there's a possibility. I know that with the stimulus checks and the past rounds, that they were sending out actual debit cards. So if you don't already have a bank account, then there's a possibility that you will get a debit card that they would load with those monthly payments.
Okay, we've got another question from Kiera Robert. She says, "What about shared custody? Do both parents get the credit?"
So that is actually very interesting to see how that's going to play out, because the general answer to that, Kiera, is no. So generally, the parent who claims the child is going to be the parent who has the availability to claim the credits. So that is going to be an interesting thing as to how that's going to work, whether or not they're going to base that on previous year tax filings, or if they're going to allow the parent who did not file the child in the previous year to claim. That, as of to date, there has been no guidance on that. But that is a really good question.
That's a great question.
Yes.
Let me ask you this. For somebody that opts out, do they still get the regular tax credit?
Absolutely. So if you choose not to receive the advance payments, once you're filing your taxes in 2021, you're going to get that credit fully refundable as if you were filing any other year. So this year, they're just in an effort to try to re-stimulate the economy and to help out those families who are in the need of the additional financial help. They are allowing us to take this as an advance. But if you choose not to take the advance, no worries, because as long as you qualify for it, you're still going to get it when you file your taxes in 2021.
Not bad. What are your recommendations overall for this?
My recommendations overall is to just be mindful that if you're going to take the advance credit, to understand that it is going to have an impact on your taxes when you file 2021, in a way that it will reduce your refund, your overall refund that you will qualify for otherwise. This year, I think it won't be a significant reduction, only because typically the child tax credit is a $2,000 credit. So it's up to $2,000 typically, with only $1,400 of that being refundable. Now with the expansion, they've increased the amount of that credit and then given us the option to take a half of it this year. I just want people to be mindful that when your taxes, if it should be a little lower, that you're just mindful if you took that credit in advance. But I would definitely say that if it's going to make a difference in the financial situation of your household, that you definitely take advantage of it. It's not something you're going to have to pay back. As the question was asked previously, as it related to parents and how that would work with their child, one of the things that had been noted is that if you were to claim, so if the parent who filed 2021 and claimed the child was to claim the advance credit, but then the other parent filed the child in 2021, the parent who claimed the advance credit based on what has already been published would not be responsible having to pay that money back. So again, I would say my advice is always to speak with a professional to make sure that you're making the right decision based on your circumstances. But if it's going to make a difference in the finances of your home, then you definitely may want to look into taking advantage of that advance credit.
We've got another question from her. She's asking, can you add dependents to the portal that were not filed on your taxes? That's a great question.
That is a really good question, Kiera, but unfortunately, because we don't have, we haven't had access to be able to see what all is in there, I'm not exactly sure how that's going to work. Because my thing would be, I'm sure they're going to have some type of way to control it to make sure that they're not paying, like intentionally paying multiple people for the same dependent.
Yeah. Well, okay, so we've gone through all of this. How do people file to get this tax credit?
So typically, in order to get the tax credit, it is a part of you filing your taxes. And under normal or different circumstances, so I guess it would be normal. So under normal circumstances, your income had to be a certain amount, and that was going to depend on if you received the child tax credit. And then if your income was now a little higher than that, then you could possibly be eligible to receive the advanced tax credit, which is actually the refundable portion of it, which is up to the $1,400. Well, now under the expanded child tax credit, income is not a factor anymore as it relates to the minimum income that you have to have. So, which is going to now allow more people to qualify for that credit. But typically you have to file your taxes in order to file it because it's a refundable credit with your annually filed taxes. But under the expanded tax credit, child tax credit, then they're allowing us to make that option in the portal beginning in July.
Any last words of encouragement or instructions for people?
So what I would say is definitely stay tuned in, because with anything, as with anything, things can change. So you want to just make sure that that you're budgeting as best you can, and not putting yourself in a situation where you're going to be heavily reliant upon this, just because we don't want to put families in any more hardship that's unnecessary if things were to change and this portal does not open up. So as of today's date, the last notification I received is that the portal is due to open on July 15th. However, there's been no guidance as to when the first check is going to go out. So I'm definitely going to say is to stay tuned in, in order to make sure that you know when that is going to happen, exactly what that portal is going to look like, and to make sure that whatever the questions are that they're going to ask in order for you to opt in or opt out, that you're making the selections properly so that you're not surprised when it's time for you to file your taxes.
So if they're looking for that portal, where would they go and find that? I guess that's the great question too.
I'm sure it's going to be right on the irs.gov official website. And I would say even with that is like, let's just be very mindful also that there is so many fraudulent things going on. So when you're going to that portal, you need to make sure that you're on the irs.gov website. If it ends any other way, then that's not their official website. And 9 times out of 10 is not going to be where you need to be entering your personal information.
Chantelle Brown, thank you very much for giving us some time and explaining this. And thanks everybody who actually, put a question in to figure out how to do this. Once again, Todd Wilson, WPTV, and we have Chantelle Brown with Class Tax Solutions. Thank you for joining us. Everybody have a blessed day.